the Gap series. This is something that's near and dear to my heart, as financial literacy is. It's so important that we are educated financially, especially during these times of COVID-19 and just crisis that we may endure. And so I believe that this workshop is going to be extremely impactful. So if you don't have friends and family that's on here, please encourage them to watch later at at another time or whatever the case may be, because there's going to be some great information presented this evening. Also, like she said, we kicked off our partnership with the Emancipation Park earlier in August, and we have a couple of more things that we'll be talking about throughout the rest of the year. We'll touch on predatory lending, and we'll also talk about home ownership and talking about the home buying process as well. So thank you to both of my great partners here this evening for allowing us to come in and do this work with you all. We're looking forward to just being impactful in our community and really helping with the facilitation of financial education. And if you have questions and want to learn more about Veritex Community Bank, you can visit our website at veritexbank.com or any of our social media outlets, which are at Veritex Bank as well. And I thank you all, and I hope that you enjoy tonight's session.
Thank you, Courtney and Veritex Community Bank, for your investment in our Bridging the Gap financial literacy program. Next, I would like to introduce our presenter for today, Ms. ShaRhonda Walker. She is the Hope Inside a Financial Wellbeing Coach with Operation Hope. After her presentation, we will open the floor for questions. I also invite you to use the Q&A feature throughout the webinar. And for those of you streaming live on Facebook, please feel free to drop your questions in the comment section. We will try our endeavored best to answer all of our questions. Without further ado, Ms. ShaRhonda Walker.
Hello, everyone. My name is ShaRhonda Walker, and I am a financial wellness coach with Operation Hope, located here in Houston, Texas. My office is in the BB&T, now Truist Bank, that's on OST in Scott Street in 3rd Ward. So today we're going to talk about credit and money management. This is one of my favorite subjects. We're going to use the Q&A box, and I just want to know, how does credit make you feel? When you hear the word credit and money, does it make you nervous? Does it make you apprehensive? If so, I was just like you. Credit and money and finances is a journey. There's no one way to fix things. What works for one doesn't work for the other. So at the end again, like Patricia said, we'll take questions, but let's get started. So the focus of our website today is money management. Operation has been in business for 26 years. So our goal is that every participant that comes to our program to reach the 700 credit club. So in order to reach that 700 credit club, we have to take control of our finances. So one of the programs that I do offer is a free credit and money management program. That's free one-on-one coaching where I hold your hand and I walk you through your credit journey. Now, what we do not do is do the work for you, but through financial education and enrichment, we coach you to take control of your finances while standing with you every step of the way. Whether you want to buy a home, a car, or just save for emergency funds, I can help you reach your journey. So over this workshop, the course's workshop, we'll go over understanding your credit, what makes up a credit score, knowing your rights as a consumer, and establishing and rebuilding your credit profile. So how many of you guys know that every year you can pull a free credit report? You can go to annualcreditreport.com. You can get a copy of your Equifax, Experian, as well as your TransUnion credit. Right now in these unprecedented times, it is extremely important to know where you stand with your credit. Whether it's inaccuracies or you can have a victim of identity theft, you won't know these things unless you know what's actively being reported on your credit. Now, keep in mind, annual credit report will not give you your credit score, but they will give you everything that's been reported on you. That way, if something is inaccurate, then you can follow up and dispute it. So, understanding your credit. Where do we stand in credit? Well, I will be honest with you guys. I was one of those individuals that I didn't know anything about credit. My mother didn't teach me about credit. Her mother didn't teach her about credit. So when I really started paying attention to what my credit was, I was at the bottom. I was 530, actually, to be correct. So I was at the bottom. I just had poor management skills. I didn't care. I closed my eyes to everything and just ran away from it. But I had to grow up. So, I'm sorry, that's some interference. Can you hear me? Okay, perfect. So the levels of credit that lenders look at is 584 or below. They consider poor credit. 585 and 660 is fair credit. 670 to 699 is good credit. 700 between 729 is good or above average, and 730 or more is considered excellent credit. With the better your credit score is, the better offers you'll get, the better interest rate you'll get on loans, and that equals out to less money that you have to pay over the course of the loan. So let's talk about what makes up a credit score. We'll talk about total debt utilization, which is 30%, length of credit history, which is 15%, account diversity, which I like to call just your account mix, is 10%, new credit is another 10%, and your payment history is 35%. I left payment history last because that is the most important piece of your credit score. It's how you pay your bills. Again, so payment history is 35%. It identifies if you pay past credit accounts on time. It includes the payment history of all revolving and installment debt. It will include any public records and collection items. It includes any details on late or missed payments. And it calculates how many accounts show up as no late payments. So you want to have a rich and deep credit history. I know in the past, some people have thought, oh, I paid off this account, let me close it. That, in fact, actually hurts your credit. I'm in my 40s, so the way lenders look at it is that I should have at least 20 years worth of credit. So you want a long, great, rich credit payment history on your credit. Accounts owed. Accounts owed is 30% of what makes up your credit score. This really kind of goes into revolving accounts only. And when I say revolving accounts, I'm really meaning credit cards. And it takes into consideration the amount of the balance you owe versus the maximum amount you can borrow, your credit limit. Credit score is maximized by keeping revolving accounts balance less than 30% of the total credit limit. So that's one of my little tricks when I coach is, it's a great way to increase your score. If you have a credit card that's maxed out and you're not understanding, oh, I'm paying this card on time every month, why isn't my credit not getting any better? Well, I look at that. You want to keep your credit at 30% of the credit limit, not the balance. So once you get the credit limit at 30% or below, your credit score will increase. And you can move your score up very quickly doing this. Length of credit history is 15%. I spoke on that a few minutes ago. Length of credit is how long your credit accounts have been open, the age of your oldest credit account, the average age of all your accounts, how long specific credit accounts have been open, and how long it has been since you used certain account. How many of you guys have had a credit card that you've paid off and you're not using it, and then you saw that the lenders actually closed the account? You had no idea, and your credit score tanked. that plays a part into the list of your credit history. So it's very good to always really keep abreast of what accounts are open and how you use them. If you find that you're not using an account in a while, you may want to make a little small purchase and then pay it off just to get some payment history on it, just to get some activity on it, to keep your credit history open. Because again, lenders look at that you have a long, rich credit history. When they see credit accounts that are 2 and 3 years old, and like I go again, if you're a 40-year-old, it kind of raises red flag that, okay, what if this person's been doing all this time? Even though I grew up at a time where cash is king, lenders really don't look at that. Honestly, credit is king right now. New credit makes up 10%. That's how many of your accounts are new. When was the last time you opened a new account? How many times you've requested credit? How long since inquiries were made by your lenders? And after past payment problems, have you had good recent payment history? So as I tell people, we're approaching the holidays. Don't go in Macy's and they're gonna tell you get an additional 20 and 30% off if you open a new credit card. Tell them no. It's an inquiry that will stay on your credit for 2 years. And then what if your credit is not strong enough to even get the credit card and you get turned down? Your score will be affected. New credit is something that you need to obtain as you need it, not just applying for everything, because it really will impact your credit score. So you want to use credit wisely. You don't want to just be having a lot of, I did that in college, just had 8 credit cards out there and didn't want to pay anybody after I charged them up. So you want to only apply and use what you need. It seems like 10% is not a lot, but it can really affect your credit score if you're out there just applying and applying and applying and applying. So types of credit in use is 10%. So we're going to go over the difference between revolving accounts and installments account. A revolving account is your credit cards and a home equity line of credit. And why they call it revolving is because it continuously cycles. You have a credit card, you use it, you pay it off. You can use it again, you can pay it off again. You use it again, and you can keep doing this for as long as the account is open. An installment account is a mortgage, student loans, car payment, or any personal loans. Those are fixed debts. That's a one amount that you pay every month till that loan is paid off. And once you've paid off that loan, you no longer have that loan available. It's paid off. So if you ever heard anyone talk about your revolving accounts, they're meaning credit cards or home equity lines of credit. And when they talk about installments, they're talking about your mortgage, student loan, car payments, or any type of personal loan. So that's the difference. And that makes up 10% of your credit score as well. So how long does negative items stay on your credit? That's the big question. So it's dependent on what type of credit it is. If it's a charge off or a collection, 7 years from the date that it became delinquent. Now, I will tell you, be careful when you're dealing with collection agencies and charge offs, because if they respond and your credit report gets updated, then your 7 years starts over again from the most recent update. So this is why, instance, if you are having charge-offs or collections that you feel like, okay, this is not in my account, or hey, I want to take care of this, you would need to come speak with someone like me before we start this, before you start doing this, so we can really take a good look at your credit and see how it's going to impact your score. General civil judgments are 7 years from the filing date. City, county, state, and federal tax liens are 7 years from the date paid. If it's not paid, it will remain on your report indefinitely. So that's something to really be aware of. Chapter 7, Chapter 11, and Chapter 12 is 10 years from the filing date. Accounts included in bankruptcy will remain 7 years from the date they reported as included in the bankruptcy or from the original delinquency date. Chapter 13 is 7 years from the filing date. Accounts included in bankruptcy will remain 7 years from the date they were reported as included in the bankruptcy or from original delinquency date. I tell anyone, if you're looking to go into bankruptcy, speak with someone first before you file bankruptcy. That way you really know what you're getting into and know that how it will affect you when you come out of it. Knowing your rights as a consumer. We have laws that protect us. That's the Equal Credit Opportunity Act, that's ECOA, Credit Card Responsibility and Disclosure Card Act, the Fair Credit Reporting Act, which is the FCRA, and the Fair Debt Collection Practice Act, which is the FDCPA. So the Fair Credit Reporting Act, which is ECOA, is basically stating that you're supposed to be treated fairly when you're applying for credit. You cannot be discriminated against based on your race, gender, religious affiliation, whatsoever. You can't be affiliated. You are protected. So if you feel as though you were discriminated against unfairly, not based on credit score, but based on other issues that fall under ECOA, then you can actually file a complaint through the ECOA. The Credit Card Accountability, Responsibility and Credit Disclosure Act is basically saying that credit card companies now have a responsibility to report true and accurate information. And the Disclosure Act means that they actually have to now provide interest rates on credit cards, that you see how much you're spending on credit. In the past, it was just a little fine print at the bottom. Now, if you look at your credit card statement, for those of you who have credit cards, it will tell you how much money you will spend in interest and how long it would take you to pay that loan off if you just pay the minimum amount. It also tells you your APR on purchases and balance transfers. The Fair Credit Reporting Act falls in line closely with the Credit Card Accountability Responsibility Act. They have to report your credit fairly. They have to report it accurately. If it's inaccurate, you can dispute it. And they have 30 days by law that they have to respond to that dispute. If you come through my coaching and you need to dispute things based on the Fair Credit Reporting Act, we'll go through all the legal processes to dispute it right. And the Fair Debt Collection Practices Act, that goes to collection agency. Basically, they can't harass you, they can't threaten you. I've actually been harassed in the past with collection agencies, and I didn't know my rights back then, but you are protected. So if you need more information regarding your rights, then after the call, get with me and we can go a little bit deeper. Now, establishing and rebuilding credit. It protects against identity theft, disputing inaccurate information, settling accounts, prioritizing which debt to pay first, establish good credit with a secured credit card, clear up any public records, don't close accounts, and pay off closed accounts with balances. That was one of the most things that I had to do once I started my credit journey. I had to rebuild my profile, my credit profile back up. So there were some things that I did have to basically pay off, and then some credit cards that I had to settle. But in the end, it was a process. It was a bit of a journey, but it was a great journey because along the way, I learned a lot of things. And with my credit coaching, if you're looking to establish or rebuilding your credit, we'll go through all those things too. Again, as I said, we're here to hold your hand and not leave you out there. So the next step will be our Q&A. That's all I have. And I'll turn it back over to you.
Okay, there we go. Let me just make sure. Are you able to see my screen?
I can see you.
Okay. Oh, okay, just give me one quick second. Okay. I love technology. It's such a wonderful thing.
It is great.
It's perfect. It's perfect all the time. I'm telling you. All right, so let me go ahead and share my screen. There we go. All right, please let me know. Are you able to see my screen now?
Yes.
Perfect. All right. Well, again, I'd like to thank you, ShaRhonda, for the incredible information and the great resources. Thank you so much for sharing that information. So what we're going to do now is open the floor for questions. So everyone who is out there in Zoom land and who's on Facebook, please use the Q&A feature located at the bottom of the screen in the Zoom toolbar. And then again, for those of you who are streaming live on Facebook, please feel free to ask your questions through the comment section, and we'll be sure to ask our questions to our guest presenter. So let's go ahead. There we go. I had some people to put in the chat. I had some people to text, and we'll take a look at Facebook to see what we have. But let's see. The first question that we have is, how can I build my credit without using a credit card?
You can build your credit through several things without using a credit card. If you have a family member who has great credit, you can ask them to put you on an authorized user, or you can use a self-lending program, and those can be used as trade lines to build your credit profile up. That is something that when people start saying that they want to build their credit up without using a credit card, I like for them to come see me first before I start just really throwing it. Even we're in a COVID, so we're in a virtual world. So it's very easy now. You don't have to drive all the way to my office. You can actually just pick up the phone or email me, and I can help you with those questions.
Okay, all right, let's see. The second question we have on here, as a stay-at-home mom, I don't have a credit card. What suggestions do you have to build my credit?
First, I would see where your credit score is. And then that will then determine if we need to go a secured credit card route, a self-lending route, or unsecured credit card route.
Okay. All right, we have another question here. I notice hard inquiries affect your credit score like auto loans. How long before the deducted points increase back to where it was?
So hard inquiries stay on your credit report for 2 years, as I previously stated. Now, of course, yes, especially when you're dealing with auto loans. So that's one thing, that's a whole nother work class on how to apply for an auto loan. But I know many of you guys have applied for auto loans and you get bombarded with inquiries and your credit score tanks. So basically, I would say as you start to establish good payment history, you'll start to see that credit score rise again. I would say you normally see it about in a 6-month period. You'll start to see it kind of inch up, but as you make great payments, it'll really jump.
Okay, perfect. Let's see, we have another one. I have good credit, but every now and then a random collections pop up and I dispute it and win. But what can I do to keep it from coming back?
So you disputed it and you won and you didn't pay. I would say your reasons for disputing it, you need to keep the reasons why the letter based on that you received back from the credit bureau on why they're deleting it off your credit report based on what you provided them. So once it then pulls up with another collection agency, you can then use that documentation as ammunition to continue that dispute. Collection agencies are very, very tricky. And one thing people need to realize is that if you don't settle them and you think, oh, I'll just wait it out, my 7 years will be over, they can then sell that debt to a new collection agency, and then it pops up on your credit report as a new collection account, which in turn lowers your credit score again.
Okay. I do have a request. They said, can you please hit on the difference between a Vantage score and a FICO score?
Okay, perfect. So that's one of my favorite things. I love it. A Vantage score is what I call a fluff score. Okay. To me, it's like just make you feel good. It's Credit Karma. You know, you just see it and you have to read the bottom line when it says what score model they're using. So it's just a feel good score. Your FICO score is what you want to know. Your FICO score is what when you apply for a loan, whether it be a home loan or a car loan or any personal loan, it is what that lender is going to use. So how I know personally, I've done that myself. I would go in there at the car loan, waving my little credit report around, saying that, hey, my credit is good enough to get this loan. And then they're saying, no, ma'am, you need a co-signer. And I didn't understand the difference of why there was such a huge disparity in the credit scores. And that's because I was looking at the Vantage score and I didn't know about the FICO. So you always want to know what your FICO is.
Awesome. Thank you. All right, here we go. Oh, this is a good one. So there are so many companies that say they can help you repair your credit and increase the score quickly. What are your thoughts on that?
You have to be careful with credit repair agencies because you have to understand they're in business for themselves. So the question to ask them, what process and procedures are they going to use to get your score repaired? Is it going to be a quick fix that only lasts a few months and then all the bad debt comes back? Or are they really going to guarantee? So I personally don't like credit repair agencies for the fact that it is a monetary business. And if you educate yourself on your credit, you can actually fix your credit yourself for free. What I do want to put out there with Operation Hope and us being a nonprofit organization, what I do, we offer it for free.
Okay. All right, here's another question. So how can you find out the date a collection account was considered delinquent without restarting the activity?
Well,
oh dear, I think we have you frozen. ShaRhonda? All right, let's try this. Hello, ShaRhonda.
yes, can you hear me?
Okay, there you go. All right, we can hear you. I'm sorry, we heard nothing. If you were answering, we heard nothing.
I'm so sorry. I can hear everything from you guys. Okay. So basically, that credit collection agency, they're supposed to send you a letter basically saying that they're saying that they're taking over the debt. And then you would then compare that with your credit report to see, okay, if it's actually on your credit report, and then you ask for documentation of what date do they seem feasible. It's really a tricky little game when you're dealing with credit. It's one of those things that I don't like to give so many answers at because I wouldn't want to lead you down the wrong path without seeing your credit report and seeing what's on your credit first.
Okay. Here we go. We have another one. Let me go here. Okay. How often is your credit report updated?
Okay. Your credit report is supposed to be updated every month. What we find is a lot of creditors are not updating the credit report every month, especially during COVID, because everyone is in a work from home virtual environment. So a lot of agencies have laid people off or furloughed individuals, and they're short-staffed as well. So sometimes you see 60 to 90 days before you send an update on your credit, but technically they're supposed to report every 30 days. So what I encourage individuals is any account that you have on your credit, call that creditor and ask them, when do you report my payment history to the credit bureau? And I would keep a log of that.
Okay. You mentioned COVID-19. I have a question here. Can you touch on the access to annual credit report during COVID-19? And can you access it more than one time a year?
So annual credit report is what it says, annual. So that is one time because they're giving you your credit report for free. Now, you can look at your bank. Sometimes your bank or your credit card company will give you access to your credit report where you can see it for free as well. Or for those of you who don't mind paying, you can subscribe to a credit monitoring service through Equifax, TransUnion, or Experian, where you can get, for a small fee, you can get access to your credit report every month.
Okay. Let's see, here's another one. This is a good one. I heard that you're able to use payment for bills to be included. To be included on a, let me start over. I heard that you were able to use payment for bills to be included on a credit report. Can you tell me if that is true? And if so, how do I do that?
I believe what you're speaking of is Credit Boost, where they're now looking at alternative payment history methods. That's something you would have to subscribe through the credit bureaus themselves, is what I've been seeing. You may have to pay for that service, but if you're one that doesn't have a lot of credit and you feel like that's going to work for you to really boost your scores up, then I would say call me first and ask a lot of questions. You know, how will it affect it? Do lenders use that as well? Would they take that into consideration? Just doing your research beforehand before you do subscribe to it, because I believe it is a fee-based service.
Okay. I have a couple more questions. Of the credit reporting bureaus, is one used more than others? I noticed my scores are different on some.
Well, it's not that one are used more than others. It's basically who your creditors are reporting to. And I've seen those inconsistencies all across the board. A lot of times you won't always get the same numerical credit score on all three credit bureaus, but you will see kind of that all your scores are in the same range. Some creditors may report to Equifax only. Some of them may report to Experian, and I'm sorry, guys. They may report to Experian and TransUnion and not Equifax. So it all depends. So what I always suggest individuals do is that if you're applying for a loan or any type of credit, I always ask up front, what credit bureau are you going to be pulling from? So that way I know where I stand before I apply.
Okay. We have a comment / question. So during COVID, I have been able to get it weekly from annual credit report until April 2021. What are your thoughts on that?
I would say go for it. That could be something that they're offering during the pandemic. And if they're letting you get it every week, I would say go for it, get it every week. I would say everyone on this call, if you're able to get it every week, get it every week.
Awesome. Okay, I have a question from Facebook.
Okay.
Is it always wise to pay off debt all at once or make payments over time?
If you're looking for positive payment history, I would say make those payments over time so you can establish that longevity. Yes.
Okay. I don't have any more questions in the Q&A. I don't have any on Facebook, not an email. Okay. So it's looking like we don't have any more questions. All right, let's see. Whoops, let's go back. Okay, so with there being no more questions, we would like to thank you all for participating in today's webinar. We would also like to thank our sponsor again, Veritex Community Bank, for their support in our Bridging the Gap financial literacy program. If you would like to have more information about Operation Hope and their services, or even how to book a consultation with ShaRhonda, you can contact her by phone, email, or even through her appointment link. We at Emancipation Park Conservancy, we hope that you're able to walk away more enlightened with new information, more empowered by tips, tricks, and techniques, and even more equipped with resources to become more financially savvy. Once the webinar has concluded, please be sure to complete the survey that will pop up automatically on your screen, or click in the survey link in the chat area, and I will go ahead and put that in there. But to learn more about our Bridging the Gap Financial Literacy Program and other upcoming programs and events, please be sure to visit our website at www.epconservancy.org and follow us on our various social media platforms, and be sure to like, subscribe, and share with your network. If you have enjoyed this virtual experience, please feel free to make a financial contribution by texting 1872 to 243-725. Your support is greatly appreciated. Thank you again for attending today's webinar. My name is Patrina Johnson, and we look forward to seeing you at our next event. Thank you.